Stop scrolling. This could change your tax return, starting today. If you're a senior, retiree, or planning to retire soon, what you're about to hear could directly affect your money in March 2026. The IRS has just rolled out a new filing rule, and many Americans have no idea it exists yet, but ignoring it could mean delays, penalties, or missed refunds you were counting on. Here's the problem. Millions of retirees still file taxes the old way, assuming pensions, Social Security, withdrawals, and side income are treated the same. That assumption may now cost you. This new rule changes how certain income must be reported, when forms need to be filed, and what happens if you get it wrong, even if you've filed taxes correctly for decades. Think this doesn't apply to you because you're on a fixed income? Think again. Whether you receive Social Security, retirement distributions, part-time income, or investment earnings, this update could trigger extra paperwork, processing delays, or surprise notices from the IRS. And here's what's really alarming. Many seniors won't find out until it's too late. By the time letters arrive, deadlines may already be missed. That's why in this video, we're breaking down exactly what changed, who is affected the most, and what simple steps you should take right now to stay protected before March 2026 hits. Do yourself and someone you care about a favor. If this information matters, hit the like button now so more seniors and retirees see this before it costs them money. All right, let's continue, because what you're about to hear is where this really starts to matter. When people hear new IRS filing rule, the first reaction is usually confusion, followed by disbelief. Many seniors say, I've been filing taxes the same way for 20, 30, even 40 years. Why would anything suddenly change now? And that reaction makes sense. Retirement is supposed to be a time of stability, not surprise. But the reality is, the tax system doesn't freeze just because you stop working. In fact, retirement is often when the rules quietly shift the most. What makes this particular change so urgent is not just that it exists, but how it's being implemented. The Internal Revenue Service is not sending out loud, obvious alerts to every retiree. There's no giant red envelope that says important new rule for seniors. Instead, the change is embedded in updated filing procedures, revised forms, and new reporting expectations that most people won't notice until they're already affected. And by then, the consequences can be frustrating, stressful, and expensive. Let's talk about why seniors and retirees are especially vulnerable here. During your working years, taxes are relatively straightforward. You earn wages, your employer withholds taxes, you receive a W-2, and you file. Retirement income, however, comes from multiple sources: Social Security, pensions, IRA withdrawals, 401k, distributions, investment income, sometimes part-time or consulting work. Each of these streams is treated differently, and the new filing rule changes how some of that information must be reported and verified. For many retirees, the biggest mistake is assuming that because the money hasn't changed, the paperwork hasn't either. But under the new rule taking effect in March 2026, the IRS is placing greater emphasis on matching reported income with third-party data. That means banks, brokerage firms, and retirement plan administrators are sending more detailed information directly to the IRS, and your tax return must now line up with that data more precisely than ever before. Even small mismatches can trigger delays. Now imagine this scenario. You take a modest withdrawal from your retirement account to cover medical expenses or help a family member. You report it the way you always have, but the financial institution reports it under a slightly different category or timing. Under the old system, that difference might have been overlooked or resolved quietly. Under the new rule, it can flag your return automatically. That's when refunds get frozen, processing slows down, or letters start arriving months later asking for clarification. For seniors on fixed incomes, timing matters. A delayed refund isn't just an inconvenience. It can affect rent, utilities, medications, or travel to see family. And the stress of dealing with IRS correspondence is something no one wants, especially in retirement. Another critical issue is that many retirees believe they no longer need to file at all. Some assume that if Social Security is their only income, they're completely outside the system. While that may be true for some, it's not true for everyone, and the new filing rule tightens how those thresholds are evaluated. Small amounts of additional income, even interest or investment earnings, can now more easily push someone into filing territory without them realizing it. This is where people get caught off guard. They don't file because they think they don't have to. Months later, they receive a notice saying the IRS received income information from another source and is asking why no return was filed. Even if no tax is ultimately owed, responding takes time, paperwork, and emotional energy. And if deadlines are missed, penalties can apply, even when the mistake was unintentional. Let's also talk about widows and widowers, because this group is often hit the hardest by tax rule changes. When a spouse passes away, income patterns change, filing status changes, required minimum distributions can change, and under the new IRS rule, these transitions are being scrutinized more closely. A return that would have been accepted without issue in the past may now require additional documentation or clarification. The emotional weight of handling taxes after losing a spouse is already heavy. Adding confusion and uncertainty about new rules makes it even harder. That's why awareness now, before March 2026, is so important. Another area people overlook is digital filing. The IRS is continuing its push toward electronic systems, and the new rule relies heavily on digital matching and automated reviews. Seniors who still file on paper or who rely on outdated software may find that their returns take significantly longer to process. In some cases, paper filers are the first to experience delays because manual reviews are now triggered more easily when data doesn't align perfectly. This doesn't mean you must become tech-savvy overnight, but it does mean that using current forms, updated software, or a knowledgeable preparer matters more than ever. Filing the old way isn't just slower. It can actually increase the chance of errors under the new system. Let's pause here because this is the moment where many viewers ask, is this just scare tactics? And that's a fair question. The answer is no. The goal isn't to create fear, it's to create clarity. The IRS isn't targeting seniors maliciously. What's happening is a systemic shift toward automation and data verification, and retirees are disproportionately affected because their income sources are more complex. The good news is this: knowing about the rule in advance puts you in control. Most of the problems we're talking about are preventable with awareness and preparation. Understanding what income you receive, how it's reported, and whether you're still required to file is often enough to avoid trouble. But there's another layer here that doesn't get talked about enough: scammers. Whenever the IRS announces new rules, scammers move fast. Seniors are already prime targets, and claims about new filing requirements give fraudsters fresh material. Fake calls, emails, and letters pretending to reference the new rule are likely to increase as March 2026 approaches. Knowing the real rule helps you spot the fake ones. The IRS will never call you demanding immediate payment. They won't threaten arrest over the phone. They won't ask for gift cards, wire transfers, or personal information via unsolicited email. But when people hear there's a new rule they don't understand, fear can override logic. That's exactly what scammers count on. Now let's talk about what you should be thinking about right now. Not in March 2026, but today. Start by mentally mapping your income. Where does your money come from? Social Security, a pension, retirement accounts, investments, occasional work. Even if nothing has changed recently, the way it's reported might have. Awareness is the first step. Next, think about how you file. Do you file yourself? Use software? Work with a preparer? If you haven't updated your approach in years, it may be time to review it. You don't need to panic or make drastic changes, but you do need to make sure your method aligns with current IRS requirements. Also, pay attention to mail from financial institutions. Forms like 1099s are becoming more detailed, not less. Make sure the information on those forms matches what you plan to report. Don't assume minor differences don't matter anymore. They often do under the new rule. As we get closer to March 2026, there will likely be more confusion, more misinformation, and more headlines that don't explain the full picture. That's why conversations like this matter. This isn't about memorizing tax code language. It's about understanding how a system change can ripple into real life for seniors and retirees. Retirement should be about peace of mind, time with family, stability. The last thing anyone wants is a surprise letter from the IRS disrupting that sense of security. The purpose of this video is to make sure that doesn't happen to you or to someone you care about. If you're watching this and thinking of a parent, a grandparent, a neighbor, or a friend who might be affected, that's not an accident. This information spreads best when people look out for each other. Many seniors don't follow tax news closely, and they shouldn't have to. But they do need someone to say, hey, heads up, things are changing. As we move forward in this video, we'll continue breaking down what this rule means in practical terms, what to watch for as 2026 approaches, and how to protect yourself without stress or overwhelm. You don't need to be an expert. You just need to be informed. And before we go any further, take 1 second and hit the like button. It helps this video reach more seniors and retirees who deserve to know what's coming before it's too late.